Let's talk about the warning signs of a financial crash. The kind of signs that most people, well, they just don't see them until it's way, way too late.
So, let's just start with a really big question. What if the next major financial storm isn't on the horizon? What if it's already starting to gather right now? Because, that's exactly how these things sneak up on us.
Think about it. By the time the news channels are all flashing red with those breaking news alerts screaming about a market crash,
And by the time your friends, your family, your coworkers, they're all blowing up your phone, panicking in the group chat,
well, the damage is already done. At that point, your money is already on the line. But here's the thing. It really doesn't have to be that way.
The thing you've got to remember is that financial crashes are not random acts of nature. They don't just appear out of thin air. They always leave a trail of clues.
And if you know what to look for, you can actually get ahead of the chaos. So today, we're going to break down the 3 biggest warning signs that a storm is brewing.
All right, let's dive into our first major indicator. This one is all about perspective.
And it's this: the market has been too high for too long. Now, I know what you might be thinking. Don't markets always go up over time? And yeah, they do. But the key here is the speed and the reason for that climb.
this is what leads to something called a bubble. It's basically when hype and excitement completely detach from reality, and prices get pushed way beyond what things are actually worth. Think of the dot-com bust back in 2000. People were buying hype, not value. And the one thing we know about bubbles is they all eventually pop. And oh man, this perfectly captures the mindset. Anytime you hear a lot of people confidently saying, "Oh, this time is different," that should be a massive red flag. It's the 4 most expensive words in investing, used to justify crazy decisions right before a fall. So what's the split in behavior look like? Well, while most people are chasing the latest hot stock, just caught up in all that hype, smart investors are quietly doing the exact opposite. They're taking some profits, they're reducing their risk, and they're building up their cash reserves. Not because they're scared, but because they're prepared. Okay, on to the second sign. And honestly, this one is arguably even more dangerous, because it's like throwing gasoline on a fire.
It's simple. People are borrowing way too much money. When you see debt levels, whether it's for regular people, for big companies, or even governments, when they start to skyrocket, the entire financial system becomes incredibly fragile, like a house of cards.
The tool that makes all this so dangerous, it's called leverage, and it is a classic double-edged sword. Sure, using borrowed money to invest can supercharge your gains when the market's going up. But, and this is the huge lesson from the 2008 crisis, it amplifies your losses even more dramatically when the market turns south.
So, while so many people get sucked into that get-rich-quick fantasy, using debt to chase huge returns, the smart move is to focus on stability. That means you're avoiding debt you don't need, you're staying liquid with cash you can actually access, and you're building up that all-important emergency fund. Because in a crash, cash isn't just about safety, it becomes power.
And that brings us right to our third and final warning sign. This one isn't about the numbers on a chart. It's all about human psychology.
You know you're getting close to a market peak when, all of a sudden, everyone you know is an investing genius. Your cousin, your barber, that neighbor you barely talk to, they're all bragging about how easy it is to make money in the market. That kind of widespread euphoric confidence is a classic sign of a top.
And this quote, man, it just nails the dangerous thinking that takes over. People start to truly believe they can't lose. They forget that risk is even a thing. They start to think the market is just a one-way street, that it only ever goes up. But markets have a very, very harsh way of teaching people otherwise.
So while the crowd is totally ignoring risk, the seasoned investors, they stay humble. They remember that markets have cycles. They're not trying to outsmart the system. Instead, they're sticking to their strategy, they're diversifying their investments, and they're getting ready for both the good times and the bad. Okay, so we've laid out the big warning signs. Now for the most important part of all. What do you actually do about it? How do you build your own financial shelter to ride out the storm? Here's your 5-step plan to get that shelter built. First, you build a solid cash reserve. This is for safety so you're never forced to sell at the absolute worst time. Second, you stop chasing the hype. Focus on strong, valuable assets instead. Third, diversify, and not just your investments, but your income streams too, if possible. Fourth, think long-term, and promise yourself you won't panic sell. And finally, number 5, this is a huge mindset shift. You learn to see a crash not as a disaster, but as an opportunity.
Let's just zero in on that first step because it is your foundation. Your goal should be to have 3 to 6 months of your essential living expenses saved up.
in cash. This is your lifeline. It's what gives you control and keeps you from having to sell your investments when they're at rock-bottom prices.
And this all leads us to the final, and maybe the most powerful mindset shift of all. It's about changing how you view market chaos completely.
And this slide just says it all, doesn't it? Where most people see a total disaster. All they see is panic, fear, and loss. Smart investors see a discount. They see a fire sale. It's a rare chance to buy high-quality, long-term assets for pennies on the dollar. That right there is how real generational wealth is so often built.
So if you take just one thing away from all of this, let it be this. You don't need a crystal ball. You don't have to predict the exact day a crash will hit. You just need to be prepared. Because when that storm finally comes, preparation will always beat prediction.